This is Miltos Savvidis, and I'm going to go through my weekly trading roadmap for the week starting the 8th of June 2015. Not as eventful as last week, but we're going to go through some of the event-driven risks, some of the market structures, the way the market's kind of setting up for this weekend. Hopefully, we find a couple opportunities to trade off of. Right, so we haven't had much news over the weekend, especially regarding Greece. Um, Angela Merkel's been hosting the G7 summit. We've had a few heated comments from Juncker, but overall, nothing really has come out of that situation yet. So we're still waiting to see on that. This week we've got the G7 summit in Germany, so we're probably going to be getting more comments out of that. What I'd like to probably say, as I mentioned on Friday, my wrap up, just be a bit wary on some of these comments. The more we get rumors of a deal or things getting rejected, just going back and forth, the market's just really fatigued with this whole situation. We're not actually seeing the market make as big the moves as we used to see, and it's almost as if when a comment comes out, let's say a good comment comes out for a possible deal that might be coming out, the algos almost use it uh, as liquidity, and they'll probably drive it down, or if it's a negative comment, they'll just drive it up. So there's actually no edge, I feel, in some of these comments. Now, again, there's a caveat to that. If we actually see a major comment, such as there's a possibility that Greece is going to exit the eurozone or something along those lines. That's a different scenario altogether. But these small comments now, I think, are not as tradable as they used to be. So I think that's something to be wary of coming into this week, because I've already seen a lot of the traders and Futex getting a bit frustrated with this. So I've got to be wary of it myself, because it was also quite annoying on my part. Right. So coming into Monday, we've got the German industrial production. That's pretty much the only data point I'll be looking at on Monday. From central bank policy perspective, we've got the ECB's Constancio, the ECB's Nowotny, and the Bank of Canada's Governor Wilkins is also speaking at a conference in Montreal. So those are three central bankers I'll be looking at on Monday, just in case they say anything. Keep an eye on those guys. They come out at separate times across the day. And then if we just take a look at some of the market structures, I'm going to go through my CQG charts to take a look at what we might have in store for us. So, as always, I'm going to start with the Euro Stoxx, and we'll see. And as you can see here, last week, coming into last week, we had broken back into this value area region, and we've basically, as expected, just auctioned in that area. So at the minute, we did close the week relatively weak. We do have a bit of a swing rebound on daily, but I think you'd have to see how that plays out. We could possibly see a bit of a bid back into this area, just early doors. However, on the week, you have to definitely take into account that we've closed relatively weak, quite weak actually, and the fact that we rejected the 36.18 area, which you see a few swing highs and lows in there. I think that's a pretty key observation. That's probably going to be a very good pivot going forward. So if we take a look at how that looks like on the market profile and see if there's any levels we can actually use to our advantage. So we closed the week at this 35.09 level, just in there. And I kind of like that level because we had a string of lows in here. It was a pretty decent level. I think 9s to about 12s is a pretty decent area. So I think that's going to be a pretty good pivot to be keeping an eye on coming into tomorrow, Monday and Tuesday as it stands. I'm looking at this chart, and the way I see this, obviously, I've got the value area between 35, 32, the value area low, going all the way up to these 35.98s. So this value area is going to be pretty key for me. Having said that, we've got a pretty big cave in here, big value cave, which, being as we're trading in this area that we've pretty much auctioned very well in the past, it wouldn't surprise me if we do auction this out. Now, for me, in order for that auction to take place, I would suppose that we'd have to find a bid and hold a bit above these areas. So this is the high TPO count area for the bottom part, and also the volume starts dissipating after these 22s, 23s. So be looking how it trades around this area, because if we start finding a bid, we can hold above here, then possibly we can start rotating back inside. Now, having said that, you want to keep an eye on this value area low at 32s, because if we can't get above that area, that's also giving you an indication that maybe we don't want to auction this, and we're, possibly the risk is to the downside in the short term. So definitely keep an eye on that level. Um, Also, you know, once we do come back in here, the lowest volume node for the middle of this range is at these 35.42s. So looking out to that level to see if we get any sort of reaction first touch. If we trade through it and auction it, I'm not looking to trade around it. I'm more looking for this to turn into a high volume node, possibly next week. So that could be a scenario if we start filling this out. Mind you, we're getting closer to roll for the equities. If it's not this week, it's the next. So I've got to check that actually. I would check that out actually, but it wouldn't surprise me if we are quite range bound going into roll. So if we do hold back inside here though, and we don't use this as any sort of resistance and we trade through it, then there is a risk for this market to start pushing its way to the upside. There are probably a few areas to be looking at. Obviously, 35.68 is the weekly VPOC. Keep an eye on the reaction there. But ultimately, once we're back into this value area, I'd be looking for this to trade and auction to the side at 35.98. Now, your resistance levels, obviously, we were looking at these 36.05s, which is a weekly value area low, which didn't quite seem to actually hold first touch. So I'd be looking in the region from there to these 18s. I think these 18s are a lot more crucial. Very, very important for me. Obviously, the rejection off that level is really key. So anything coming back into this area, in fact, 9s, I like the selling tail as well, so that could be a really decent area. To the downside, obviously, through that area, weekly low at 34.88s, just in there. 34.81s, we've got the low of this big buying tail, and then all the way down to the value area low of this week at 34.62s, and then the recent swing low at 34.41. If we do start offering below those 81s, however, I think we could possibly see a pretty swift move down. Just be wary if you're fading in these areas. I do believe these areas are going to offer really good support, but just because of the way we kept rejecting these areas, it could be a few stops, possibly a few stops, or some people trying to liquidate some of their longs. So just be wary of the reaction through there. Right. So that's the Euro Stoxx on the week. Let's take a look at this bund, because the bund last week was quite ridiculous. Insane moves. I mean, we did get this ridiculous sell-off. This was basically the whole week was a massive trend to the downside. We did close after that bounce off the 1% yield level. And now we've got from Friday, the NFP day, which is interesting. We've got Friday was an inside day. So we managed to hold it. Obviously, with these ranges, it's not crazy. The inside day is pretty much just over a point. But taking a look at this again, it's just quite interesting to see how this has set up. Obviously, we've got an inside day. If we take a look back here, this is that is that swing low that we saw back in the beginning of May, in the 7th of May. That was when we saw the really, really sharp sell-off in the bunds. That came in, well, obviously on this contract at 151.00. So for me, I think that's going to be a bit of a crucial area to be keeping an eye on if we do start finding a bid above that area and holding. That probably coincided with the top, well, being on top of this trend line resistance. Mind you, our 38.2% fib of this sell-off, the clear swing high, clear swing low, comes in at 151.37, well, 151.38. Really. So keeping an eye on that, because if we do come up into this area, I am looking at the fact that we've got an inside day, we've got a buying tail in here, a buying tail in here. So the potential, I mean, short term, I feel as if we could break to the upside and sort of fill this very low volume region out, maybe fill in some of that area we didn't really trade much on the ECB day. But mind you, if you go back, and this looks quite lightly traded, but um, on the same premise, we had this bounce after this enormous sell-off back in May, and it had a very similar setup. I was looking at the well, a lot of the traders were looking at this, the possibility of this breaking out and then filling in some of this low volume area, and that came in on the previous contract at around, I think it was 154.97 and 155.03. Now that was the swing high here, 155.03. So there's, mind you, if we fail in a similar fashion like we saw last time, that could be an indication that we get that rotation back down and test that buying tail area, which comes in around here. So what I'm saying is, if we break above here, test this 38.2% fib, um, and then fail to go higher and come back into this range, well, then I'm looking for this to roll over, given this medium-term bearish trend, roll over, test these 150s, and possibly even go through that. So that's the scenario analysis for that. If I'm seeing good volume and it's holding within this area, lifting above this fib, I would expect we could vacuum through this area quite quickly, and then effectively I'd expect for this to sort of fill in this really low volume region. Given the recent really big sell-off, I think any bids in the market, there should be good auctioning off of decent resistance. Now I'm looking, if we do get back through here quickly, there's this 50% fib that comes in at 152.15s or 152.16s. And that's basically around the regions where we saw the beginning of the sell-off of the ECB, which I like a lot because that's basically where we see the next higher volume nodes. They come in basically at those levels. So I'm liking the fact that that's a good confluence there. So if we get to that level, I'm looking to get some shorts off in here, and there's really good risk reward in that, and possibly rotate back in to this region and auction it through. That is a scenario for me. Obviously, if we don't break to the upside, I'm looking for a possibility that the market starts rotating. If it does break that inside day to the downside, it almost looks as if it's built a bit of a flag, so we can just possibly see that rotation lower, and you'd be looking for a test that recent low, a close below that low, and then we should see that flag confirmed, and we could start seeing a bit of a continuation to the downside, but that's obviously yet to be seen. So unfortunately, I can't get up the monthly market profiles on CQG, but I'm going to go through the weekly anyway. But I highly advise anyone that's trading the Bund to look at your monthly market profiles. I'll hopefully send a few across on our Skype chat group or on my Twitter account. So if you guys are following me at MVS_Futex Live, I might just post something across for you guys to take a look at if I see something nice on the monthlies. Because last week the monthly market profile charts have been giving me some good bearings on where the market wants to auction to and where it doesn't want to auction to. So I think that's going to be quite crucial. So taking a look at the weekly market profile, obviously it's very, very elongated. We've got the weekly value area low coming in at 149.61s. Bit of high volume in there as well, so decent little area. I think first time we get in here, possibly, we could get a bit of a reaction. Obviously, that is through just below that inside day break. So mind you, if you are trading that and it's gone about 20 ticks, look to possibly cover a little bit here, and then if we obviously offer through that and hold, that's a different scenario altogether. I'd be looking for that to start rotating quite quickly lower. Now, looking to the upside, the VPOC of the week comes in at 150.55s, but basically all these, I mean, it's a very close second, third, and fourth place for the weekly VPOC coming in, at the prices just above that. So I think what you want to be looking at is that region from 150.55 to 150.58ish, because then the volume drops off at 59. So just keep a bearing on that, because I mean, if we are holding above that early doors and we start making our way to the upside, I think that could be a little bit of an indication if we were trying to attack the upside. To the upside, we were looking at these 151.23s as a reference point. We did say that these I think it's around these 38s. We've got the 38.2% fib. So any failure to hold a bid in this region, and we, bust bust back below these 23s, I'm looking for a really swift, quick rotation down to this VPOC. So that is, I think, a reasonable setup early doors if we're not seeing that, really aggressive bid back into this area. Now, if we do hold that bid, there's, a lot of very low traded areas. I mean, just barely anything on these. We're seeing 500 contracts, 400, nothing. I mean, 700, a couple of thousands here. There's very little traded in this area. So, if we are lifting with quite decent size, I'm not seeing any sort of resistance in this area personally. Um, so just keep that in mind. If we do break above here, we could see this moving quite quickly. So the 50% of last week comes in at these 152.15s. We just mentioned that. And I like the fact that it's basically just before we get back into this higher TPO area. So if we're holding in here, I'm expecting thoroughly for this to just rotate and fill this out if we do get back into this region. Otherwise, if we're holding above that, that's a different scenario again. But I think it'd have to do a lot of work to start building more structure up in this region, and possibly we have to see a bit of a fundamental change, um, whatever that may be. Right. So that was the Euro Stoxx and the Bund. Let's take a look at some of the event and risks throughout the week again. Tuesday, not much coming out. Really, only thing I'm looking at is Chinese CPI, which is coming at 1.3% expected. Looking at this figure, obviously, we've seen some stimulus out of China. If we're getting lower figures, expect for there to be some rallies across the Chinese markets. We've been seeing worse numbers now are effectively just being bought up across Asia. So just bear that in mind. ECB speaker, we've got Liikanen. He's a leaning hawk. He's speaking on Tuesday. Moving into Wednesday, we've got the UK industrial production. That's expected at 0%. The manufacturing production expected at 0.1% month on month. And then, of course, the US crude oil inventories, which are coming in on Wednesday as always. We've got the ECB's Liikanen and Hansen, both leaning hawks for the ECB, speaking on Wednesday. Again, keeping an eye on these two individuals. And then looking at the market structure, I'm looking at the WTI crude oil market. As it stands, I've taken out all my trend lines, and the structure here is a bit messy. I'm not seeing any convergence. I did have a bit of a flag in here. I've just taken it away. For me, this is very much range bound in this area. But in the very short term, we have posted a swing rebound bullish candle back into this region. So possibly early doors, we get a bit of lifting through these areas. For me, it almost feels as if there's, every time we get into this area, we're absorbing it, leaving wicks. So in this scenario that we do come, I mean, the formation's not even there yet, but I do like these cup and handle formations. It's looking a little bit rounded off. I'm not going to call this so early, but if we do get a double top up at these 62.58s, then I'd be looking possibly for a little handle to form just above this area, which is around 61 bucks in here. I mean, this is really ahead of the time, but I always like to just keep in mind, think 10 steps ahead. I'm not playing for it. I wouldn't be playing for it, but just looking at it. So as it stands, we've got a bit of a swing rebound. Obviously, once we start breaking and closing candles below these 56, 51s, I think the short-term risk is firmly to come test these, this gap region between these 54.24s up to these, I'd say around 55 bucks. So in this area, we haven't really traded much volume ever since we broke that level. So possibly we come and test that area if we do start closing weak. Thursday, the main event regarding the data points out of the U.S. with U.S. retail sales, which is expected to come out at 0.9% month on month. Now, with this figure, we've been seeing a lot of good volatility ever since October 2014, when that number came in, a really big miss. That's what we saw essentially um, the melt up in the T notes, which did, an incredible. I can't remember. It was 3 to 4 points. It was within minutes. We just had a melt up in the market. So I'm looking particularly at the T notes for this event driven risk. Um, the yield. I'm looking at the yield chart as it stands right now. Um, it's interesting the way this is set up. It's got a bit of an inverse head and shoulders in the yield. We've finally broken with quite a bit of strength through this trend line resistance. So we were kind of downtrending in here. We've had our bearings pretty much, the trend channel in here to the downside. We've finally closed above it. We actually closed spot on this 2.4% yield level, which is a pretty big yield level going back. You can see it's a swing high, it's a swing low in here, it's a swing high in here. So I think this level is going to be a really big pivot this week. Keep an eye on that 2.4% yield level. If we manage to hold above this level, for me, I think the short to medium term risk is that this market tests this 265 yield level, which is also got a bit of confluence with a very, very long term, multi-year trend line in yield, which comes in around that level. So watching the reaction around here, obviously I'd expect for this to for the market to find a bid around here, so an offer in the yield. But if we're breaking through this level, I think there's something significant happening, something changing in the market, and we could possibly see, a pretty rapid move in yield to the upside. So bear in mind the way this is structured right now is really quite interesting. Also the fact that, now we're above this 200-week moving average, which you can see was holding us in here, holding us in here. We kind of ranged around here, but once we broke through it, we started holding it again to the downside. Again, here we held. We've just played around with it for a while, and now we've finally broken here quite strongly to the upside. So that's quite a crucial little. I think that the way this is set up is quite interesting for me coming into this week. So bear that in mind. Any um, big numbers for me effectively, I think this week in particular we should see good sell side action in the T notes, even if we get, possibly a worse number than expected and this yield starts coming off to the downside. um, I still feel as if we could find some good quality sell um, some good quality sells in that, and then we could start rotating right back up again. For anyone that hasn't gotten involved in this, maybe they're still waiting for that opportunity. Obviously, if we get a much higher number than expected, I think um, there could be a very, very big move to the upside in yield. So watch this market. I think it's going to be quite crucial coming into Thursday. So just before I move on to Friday, we've got the ECB's Lautenschlager, which is a hawk speaking on Thursday, so keep an eye out on her. And then come Friday, I'm looking at the industrial production. The Eurozone, sorry, this is a Eurozone industrial production, if I remember correctly. And then the US PPI core month on month, and the US University of Michigan consumer confidence preliminary number. Now, from a market structure perspective, obviously this chart's probably going to look a lot different coming to Friday, but I'm looking at the structure in the S&P. The way this is set up for me in the short term, I'm relatively bearish. I think everyone, when they want to make their comment about the S&P, if they have to say they're bearish, they always stutter a bit because it's really difficult to be bearish this market. Just incredibly difficult. There's just a number of computer programs, machines that love to hold it up. The price action is it's quite difficult to be short this market. But having said that, we have false broken to that high at to 119.75. So we false broke that all-time high. We tested it, and then we've broken down and effectively touched that trend line support in here. So I'm looking at this trend line support for any possibility or reaction of this market coming through that in this week. I think the way this has moved up in price, it's moved up in layers. So initially we had this box layer in here. We started paying attention to these 2033s, which gave us a little layer from here up until these 2064 50s. Again, a little bit of a box in here, and then another little bit of a boxed area until these 2081.75s, and then again from here moving up to these 2093 25s, and then from that region all the way up to these 2019s, and then above there you've got from there to 2134. So for me, once you start breaking below, if we start breaking below this trend line and holding below these 2081 and 3/4, I think the next possible rotation down should be theoretically to these 2064.50s, which should be the first area of support to be looking at. Then through there, you're looking at a possibility of this testing the 2033.25 area. That's a very key little double bottom area. Through that, I think it could get aggressive, and we're seeing a pretty swift drop through these 2000s, probably down to these 1981.50s. Now, failure to hold an offer through here, then I'm looking at this to possibly rotate back up, possibly test and attack this area. Now, if we find an offer, okay, we could start rotating back down again. But if we're holding a bid back above here, I think any fresh shorts that have been put in are going to get liquidated pretty quickly. So just bear that in mind, the way this is structured in here. I think it's a bit quite interesting. Possibly, we've been looking for a possible sell-off in this S&P. It's false broken, yet again, failing to find a bid. If we're getting a reaction, any sort of news that's going to really push the European markets to the downside, maybe that's going to give us, maybe it'll tip its hand and finally start a bit of a medium-term sell-off. Right, so let's take a look at my risk and money management plan this week. From Monday, we've got 4 venture and risks, pretty low relevance. I'm putting about 15% on that. Tuesday, 2 venture and risks, quite low. I'm keeping the same risk allocation for Tuesday. I'm usually seeing, from what I'm seeing Tuesday, we're getting quite big moves. Tuesday, beginning of the week, especially Tuesday, Wednesday, I'm liking them, so I'm gonna keep that the same as Monday. Wednesday, we've got 5 venture and risks, about medium, pushing that up to 20%. Risk allocation Thursday, the big event, retail sales. I think that's really relevant. I'm putting about 30% of my risk there. And then Friday, 3 venture and risk, medium relevance, 20% of my risk allocation on that. Okay, thank you guys very much for listening to my weekly roadmap. I will be doing the afternoon debriefs for this week as well, so please tune into those so we can go through some of the market moves and how we could have traded those on the day. Just a little bit more of a short-term view on how to trade the markets, because usually what I do is a little bit more long-term with you guys on my wrap-up and my roadmap. So my debriefs, if you want to see a bit of my bit more of a granular approach to how I'm looking at my trades, I think that could be of value to you. So thank you very much. Hope you guys have a great trading week and take it easy. Bye bye.